The Precious Metals Week in Review, October 9th, 2015. Brought to you by Precious Metals International. Markets continue to be volatile as tensions between the U.S. and Russia escalate over Syria's ongoing civil war and global economic sluggishness continues. The number of Americans filing new claims for unemployment benefits fell by a surprising 13,000 claims to a seasonally adjusted level of 263,000 for the week ended October 3rd. Claims for the previous week were revised downward by 1,000. The number of continuing claims, which count those people still receiving benefits after an initial week of aid, rose by 9,000 as of the week ended September 26th. The data seems to reinforce the picture painted by last week's non-farm payrolls report. U.S. companies are not increasing their hiring despite a recent reduction in the number of layoffs. As U.S. Treasury Secretary Jack Lew's November 5th deadline for action on the so-called debt ceiling approaches, a leadership vacuum has opened up in the House of Representatives. John Boehner has stated previously that he will resign his post as Speaker of the House, as well as his seat in Congress this month. The Republican Party has been thrown into disarray as they search for a new Speaker, with the most likely candidate declaring himself unfit for the job. John Boehner will likely be forced to stay on the job until a new Speaker can be found, and the division among the Republican Party will likely widen. U.S. wholesale inventories rose in August, driven largely by computers and business equipment, according to the U.S. Commerce Department on Friday. According to Reuters, using August's pace of sales data, it would take 1.31 months to clear shelves of the buildup in inventory. Also, according to Reuters, an inventory-to-sales ratio that high may indicate an unwanted inventory buildup, which would require businesses to liquidate stocks. That, in turn, could weigh on manufacturing and economic growth. Earnings season has begun in the U.S. once again, and so far the results have been less than impressive. Many multinational companies with exposure to China are coming in well below earnings estimates. Yum Brands, the parent of chain restaurants Taco Bell, KFC, and Pizza Hut, saw its share price drop 18% on Tuesday after its same-store sales in China came in lackluster, and the company scaled back its growth forecasts on pressure from both China and foreign exchange costs due to the strong U.S. dollar. Commodities giant Glencore, which saw its own stock price plummet last week on announcements that it was struggling under its debt load, announced on Friday that it would be cutting its global zinc production by 500,000 tons, saying current prices do not correctly value the scarcity of our zinc resources. Glencore remains positive about the medium and long-term outlook for zinc, lead, and silver. However, we are taking a proactive approach to manage our production in response to current prices. Reuters, quoting anonymous U.S. officials on Thursday, said that 4 Russian cruise missiles fired into Syria from a warship in the Caspian Sea on Wednesday had crashed in Iran, while Russia insisted they had reached their targets in Syria. The Russian Defense Ministry denied that the cruise missiles fell short of Syria, saying, "In contrast to CNN, we do not talk with reference to anonymous sources. We show the launch of our rockets and the targets they struck." Reports continue to surface that Russian troops on the ground in Syria are targeting U.S.-backed rebels who oppose President Bashar al-Assad and not designated terrorist groups. The U.S. Pentagon announced on Friday that it was halting a program for training and equipping Syrian rebels, deeming the current program ineffective in helping them fight against Assad. In Europe, German exports in August plummeted at their fastest rate since 2009, sparking discussions that Germany, long the bright spot among the Eurozone economies, could be losing its momentum. Exports fell 5.2% in August amid weaker global demand. The fallout of the emissions scandal at Volkswagen is also likely to affect fourth-quarter German exports as well, since sales for the beleaguered auto manufacturer are expected to drop as it attempts to repair its reputation in the eyes of the public. The ongoing migrant crisis across Europe is also expected to place a financial drag across Germany and throughout the rest of Europe as well. Crude oil was driven higher during the early part of the week on the escalating tensions between the US and Russia in Syria. Brent crude oil pushed its way over $50, but a surprise inventory build in the U.S. and the release of the meeting minutes from the last Federal Open Market Committee (FOMC) meeting, showing that the U.S. Federal Reserve appears in no hurry to begin raising interest rates due to external economic weakness, both acted to put downward pressure on prices again. The euro climbed against the US dollar to start the week, but then plunged lower by late Monday. The euro began trending higher early on Tuesday and continued that trend through the week. The euro appears set to close the week higher against the US dollar. The Japanese yen began immediately moving lower against the US dollar at the start of the week, but it too began trending higher by Tuesday. Unlike the euro, the yen could not continue its upward move and had peaked by Thursday and begun moving lower again. The Japanese yen appears set to finish the week lower against the US dollar. Volatility should be expected to continue. The meeting minutes for the last FOMC meeting, which determines monetary policy moves by the U.S. Federal Reserve, were released this week and revealed that despite media spin to the contrary, the vote on whether to begin raising interest rates was not even close among the group. The key excerpt from the meeting minutes was, participants discussed the potential implications of recent economic and financial developments abroad for U.S. economic activity and inflation. A material slowdown in economic growth in China and potential adverse spillovers to other economies were likely to depress U.S. net exports to some extent. In addition, concerns associated with developments in China and other emerging market economies had contributed to a further appreciation of the dollar and declines in prices of oil and other commodities, which were likely to hold down U.S. consumer price inflation in the near term. In other words, just as we surmised, the U.S. Federal Reserve appears trapped in its ultra-low interest rate policy by the sluggish global economy. Fed officials continue to try to push for a rate rise sometime this year, but the continued slowdown in emerging markets and the global economy as a whole will likely mean they will be unable to do so. The media is beginning to speculate that the Federal Reserve may actually be forced into additional quantitative easing in the U.S. instead of being able to normalize rates later this year as they apparently desire. Having narrowly averted a government shutdown last week, Congress is in turmoil on the heels of the resignation of Speaker of the House, John Boehner. House Republicans have been unable to come up with a clear successor for Mr. Boehner, and a leadership vacuum has formed in the disarray. U.S. Treasury Secretary Jack Lew has warned that Congress needs to act or we could be faced with a crisis. We have the capacity, but do we have the will? The crisis that Mr. Lew is referring to is the fact that the U.S. government will hit its debt ceiling in the next few weeks and will effectively run out of money again. Mr. Lew is imploring Congress to act by raising the debt ceiling again. With the leadership struggle underway in the House of Representatives, the likelihood that Congress will be able to expeditiously act to raise the debt ceiling as Mr. Lew desires are even slimmer than they were the last time the government blew through the debt ceiling. During the previous debt ceiling debate, a default by the U.S. Treasury was only narrowly averted at the very last minute and cost the U.S. its AAA credit rating. In Syria, the U.S. and Russia appear to be increasingly at odds with each other, and the rhetoric between the two countries also appears to be ramping up. Anonymous U.S. officials were cited by Reuters as saying that 4 cruise missiles launched from a Russian ship in the Caspian Sea fell on Iran instead of the intended Syrian targets. U.S. Defense Secretary Ashton Carter said this week that Russia has chosen to double down on their long-standing relationship with Assad, committing additional military hardware capabilities and personnel. Now, the Russians originally said they were going in to fight ISIL and al-Nusra and other terrorist organizations. However, within days of deploying their forces, the Russians began striking targets that are not any of these groups. I have said repeatedly over the last week that we, the United States, believed this is a fundamental strategic mistake and that it will inflame and prolong the Syrian civil war. We have not and will not agree to cooperate with Russia so long as they continue to pursue this misguided strategy. The spillover from the conflicts in Syria and elsewhere in the Middle East continues into Europe in the form of the ongoing refugee crisis. As the migrant relocation program gets underway in Europe, it appears that many migrants are failing to qualify for asylum as refugees and thus are slated to be deported back to their home countries. European Commissioner for Migration, Home Affairs and Citizenship, Dimitri Avramopoulos, said in a statement on Friday, "When we talk about refugees, we need to also talk of those who are not refugees. We need to be better and more effective, not just at helping people and offering refuge, but also at returning those who have no right to stay. All of these actions have to go together." A press release by Justice and Interior Ministers from the European Union on Thursday said, "All measures must be taken to ensure irregular migrants' effective return, including use of detention as a legitimate measure of last resort." Finally, the global economic slowdown is becoming more and more evident as earnings in the U.S. begin to come in far below expectations. Germany's economy shows a rapid deceleration, and of course, China continues to drag down emerging markets with its own economic slowdown. It seems to be apparent that global geopolitical and economic certainty are on the rise and that increasing concern appears to be trapping global central banks in their ultra-loose monetary policies. Inflation targets across the globe seem to be increasingly moving further and further away from stated central bank targets, and there seems to be a growing fear that there may be a very real danger of renewed recessions around the planet. As the uncertainty escalates, skittish stock investors appear more and more willing to seek out alternative areas to invest their hard-earned cash. Wise investors have continued to accumulate physical precious metals as part of their well-diversified investment portfolios. Cost-cutting at global mining operations has apparently reached its limit, as evidenced by commodities giant Glencore's announcement that it would cut its zinc output by 500,000 tons due to unprofitability at current price levels. As more and more mines across the globe continue to scale back their output at what they themselves state are unprofitable price levels, the availability of the product they output, including gold, silver, platinum, and palladium, will likely continue to decrease until prices begin to rise to more profitable levels. It is also important to note that a price rise in precious metals will not mean instantaneous resumption of operations at mines that have been shut down due to unprofitability. Mining companies will likely need to see a decisive move to the upside in prices before committing further cash to resumption of output. Simple supply and demand dictates that a product seemingly in short supply commands higher and higher prices, and chasing those upward price moves after they have already begun becomes more and more difficult as supply shortages become increasingly evident. Remember that precious metals should always be viewed as a long-term investment, and that the key to profitability through the ownership of physical precious metals is to actually acquire and own the physical products and to hold them for the long term. Always remember that you should never overextend your ability to maintain ownership of your precious metals over the long term. The Precious Metals Week in Review, October 9th, 2015. Brought to you by Precious Metals International.